Thanks for staying tuned, and we'll start off this segment on the global oil market, where prices rose in early trade today on expectations the world's largest oil producers would agree to cut production at a meeting later in the day as the industry grapples with a coronavirus-driven collapse in global oil demand. Brent crude futures rose 1.2% to $33.25 a barrel. The contract rose to an intraday high of $33.90, climbing for a second day. U.S. West Texas Intermediate crude futures were up 3.31% at $25.91 a barrel, after earlier climbing by as much as 6.1%. The Organization of the Petroleum Exporting Countries and allies, including Russia, a group known as OPEC+, are set to convene a video conference meeting on Thursday. Now, the meeting is expected to be more successful than their gathering in March, where they failed to agree to extend supply cuts and trigger the price war between Saudi Arabia and Russia. And the economic fallout from the coronavirus could increase global poverty by as much as $500 million. Now, this bleak warning comes from a United Nations study into the financial and human cost of the pandemic. The report says it will be the first time that poverty has increased globally in 30 years. The findings come ahead of key meetings of the World Bank, International Monetary Fund, and G20 finance ministers next week. The report, which estimates a 400 to 600 million increase in the number of people in poverty across the globe, says the potential impact of the virus poses a real challenge to the UN Sustainable Development Goal of ending poverty by 2030. Now, according to this report, by the time the pandemic is over, half of the world's population of 7.8 billion people could be living in poverty. About 40% of the new poor could be concentrated in East Asia and the Pacific, with about 1/3 in both Sub-Saharan Africa and South Asia. Earlier this week, more than 100 global organizations called for debt payments to be waived this year for developing countries, which would free up $25 billion in cash to support their economies. All right, let's look at what's trending on the domestic commodities market. And I'm being joined by Bolanle Agbaje, one of the research analysts with Financial Derivatives Company. Thank you, Bolanle. All right, we're talking about oil today. Is the planned meeting. Now, we've seen a lot of uncertainty around the oil market ahead of this meeting. There is a clue that they may agree actually to cut output, but then the issue is, will the U.S. play its own part?
I think as at this morning, we'll say probably 80% to 20%, so 80% being it's more likely that they would actually collude and come to a decision to cut output by about 10 to 15 million barrels per day. But we also gotten news that, you know, on the side, the U.S. has also struck or is trying to strike a deal with Saudi Arabia and Russia to also join or take part in cutting output as well, because obviously it doesn't benefit anyone in the long run. Most of these countries don't benefit from increasing revenue or even profit, to say the least, when it comes to oil prices at the moment. But oil prices have gained. They're very close to about $34 per barrel, which is great.
At least above $30 benchmark that we have right now.
We have for the supplementary budget, yes. So it's great news at the moment. So which is just a wait and see. We'll see by the end of today what comes out of it, but we're most likely positive.
Now, but what incentives are there for lower cost producers like Saudi Arabia and Russia to actually cut their production?
Well, when you look at the short term, it seems like they have enough cover. You know, when oil prices have gone down, they've made a lot of profits in the past. They're able to cover up the losses they would probably encounter during a period when oil prices are low. But in the long run, it doesn't benefit them as much. And also, as time goes on, it's more likely that they would, you know, lose market share. The demand, we're not seeing any pickup in demand, and that would now, you know, reshuffle what the market share is saying at the moment globally. So it's a high risk for these countries. So it's in the best interest to make sure they cut output by a significant amount. So I'm not expecting that they cut output very close to the loss in demand, which is about 20 million barrels per day. but very close to that.
Yeah, but you're anticipating 10 to 15 million barrels per day?
We hope that
Why?
that's where they, because they've already lost demand of about 20 million barrels. So if they cut below 10 million barrels per day, then we might not see any significant impact on prices. So I think that's the reason why they would move towards a number that is very close to the loss in demand, or the anticipated loss in demand.
So we heard the IEA chief say Saudi-Russia oil deal is not enough to address oil markets' big problems at this time.
Well, I would understand why he would say that, because the global pandemic is having detrimental impact on demand. So as much as they would do their part, I think it will only boost oil prices to a certain level, but it then depends on what happens to the countries. So when you look at China, US is also a major consumer. What happens to the individuals within the economy? How they're talking about, earlier you mentioned about the poverty levels rising. So when you look at, the ability of businesses to sustain themselves and increase demand from within these countries, if we don't get significant push from that angle, then obviously the economics will play its part. When you have a reduction in demand, there's only so much supply or cut in supply that you can put in place to actually see a boost in prices.
All right, let's look at other issues that you have there on your burning economic issue. The federal government, of course, seeking debt relief from China, at the same time asking for concessionary funding from multilaterals.
International bodies.
Yes, what will be the implication of all of this?
We've mentioned, I'm sure you've seen it severally, where it's obvious that Nigeria doesn't have enough money to, cover the cost of the implications of the COVID-19. So borrowing is the next best option, and borrowing at a rate that is sustainable. So this concessionary funding is expected to, have a moratorium of about more than 3 years. So it means that during that period, they wouldn't be expected to pay back. So, and I know the total payback period is about 5 years. So, which is great. It wouldn't put so much pressure on us to, and I think it's fair enough. I know obviously a typical situation or an ideal situation is for us to get that funding and, more or less like a grant. But I'm sure these international bodies are pressured by different countries around the world to, support. And if we're getting that 6.9 billion, I think it would do some good pertaining to, Nigeria's corruption and all that, which has to be checked to make sure these funds are directed to the right channels and to obviously prevent poverty or continuous poverty within Nigeria.
Okay. Now let's look at the currency market. Yesterday we saw the parallel market trading at 400, above 400 naira per dollar, actually.
Yes.
417 naira, even though we had the INE window, we saw 380, still within the 380 band. What would that mean for the commodities market, this disparity?
Well, I think at the moment we've seen a drop in, or an increased a drop in demand for the dollar at the moment. But obviously that definitely, if you're looking at a scenario where we don't have this COVID-19, then that would speak to higher cost because most of our commodities are being imported. But I think at the moment, it's the devaluation of the exchange rate, which I think is going to go down further, is more or less an implication or a reaction to what's going on in the economy. So 470 is still fair. I think is going to probably, decline much further than that. But it's the CBN, I think, is monitoring the movement of the dollar and naira exchange rate.
All right. Well, looking at the other domestic commodity prices, of course, prices have continued to rise.
Yes.
We've seen a lot of stockpiling continuing. When will this end?
I think generally, even globally, you're seeing, apart from oil price, but most agricultural commodities are increasing prices.
Absolutely. I have a report here, rice price. I mean, the Asian one we normally would import globally is on the rise.
Yes, yeah, because obviously you're forgetting this weekend is the Easter weekend. I'm sure obviously the fact that people are not going out doesn't mean they wouldn't cook a feast in their homes to celebrate the holiday. But I think the stockpiling, the demand, and uncertainty of when this COVID-19 would end, and even if we don't actually know when this lockdown would actually come to an end. So that panic of, making sure that you're well stocked in most people's houses is what contributes to the prices. We've seen more or less prices increase, and the best case scenario, prices remain flat. But I think they would obviously keep going on the rise because of the implications of the demand and supply side policies.
All right, thank you very much, Bolande Abaji, for your time.
Thank you so much.
This is Thursday,
yes.
and we're entering the Easter holiday, and I'm sure you're preparing to eat your rice and all of that.
Without family.
Enjoy your Easter break.
Thank you so much, and you too.
Yeah, absolutely. Before I get to Tempo, here is this report from WTO on trade, and in estimates unveiled on Wednesday, the World Trade Organization economies project world merchandise trade volumes this year will fall by between 13% and 32%. Their calculations are subject to uncertainty about how COVID-19 and its economic impact will evolve. But to put these figures in perspective, the report says the optimistic scenario would be worse than the 12% drop seen at the height of the global financial crisis in 2008-2009. The pessimistic scenario would be on par with the fall in world trade seen during the first 3 years of the Great Depression from 1929 to 1932. WTO's Director General says even as the crisis rages, governments must start planning for its aftermath on the economic front. This means laying the foundations for a strong and socially inclusive recovery. Trade and international coordination, more generally, will be important ingredients here. According to him, the positive news is that a strong recovery is possible. The fundamentals of the economy remain solid, even though the fuel line to the engine has been cut off. He's calling on world leaders to make good policy decisions and give businesses, households, and would-be entrepreneurs reasons to be confident about the future. WTO economists estimate that if the pandemic is brought under control relatively soon, trade and output will potentially rebound nearly to their pre-pandemic trajectory as early as 2021. Meanwhile, I talked about the price of rice, and of course, the price of rice, a staple food in Asia, has hit 7-year highs due to the coronavirus outbreak as importers rush to stockpile the grain while exporters curb shipments. According to the Thai Rice Exporters Association, price of the 5% broken white rice, the industry benchmark, rose 12% from March 25 to April 1. Rice prices are now the highest since late April 2013. Now, the rise in prices is due to expectations of higher demand for Thai rice after fellow top exporters India and Vietnam both face export disruptions of the strategic staple food due to the outbreak of the coronavirus outbreak. Asia produces 90% of the world's rice supply and consumes the same amount. Now, in India, rice traders have stopped signing new export contracts as labor shortages and logistical disruptions hamper the delivery of existing contracts. The Vietnamese government, meanwhile, has put in export curbs. The gain in prices comes despite expectations of robust production this crop year and carryover stocks of rice and wheat being at all-time highs. Our food industry associations and organizations are urging countries to keep trade open. Okay, for details of yesterday's trading activities, let's join Temple. Temple, investors remained optimistic at the equities market yesterday despite the COVID-19 pandemic. What's driving this new optimism, and how sustainable is it?
Well, it's sustainable in the near term, Chimize, and of course the reason we are saying the sentiment, the positive sentiment, is simply because there are basically no outlets for quite a number of these institutional investors that you might want to refer to as corporates at this point in time. So they've checked the debt market, the bond space is filled up, there's shortage of supply on that end, almost space, the same thing, as well as the NTB space. And so equities is also an opportunity because, again, you have quite a number of attractive and fundamentally sound stocks on that side of the market. And it's the reason why we were able to record this 71 basis points increase that we have yesterday on the key benchmark indices of the market, pushing the key benchmark indices back up to the 21,000 psychological position, because we had been at 20,000, which is a downward trend for some time now. This still means that we're still in the negative sense of things when it comes to the year-to-date performance of the market. And of course, we still have the equity capitalization below the 11 trillion naira mark. For the volume of transactions, that refers to the activity level of the market yesterday. We saw a situation where the volume was up some 1.12%. And of course, the value of transaction was also up. The day before, we had seen some 5-point-something billion naira worth of transactions. The same thing was what we saw recorded yesterday. And of course, we've been able to maintain the 4,000 mark for the deals. If you look at the sectoral performance, quite a number of the banks were also up yesterday. Just as we saw Wema Bank doing very, very well yesterday. Fidelity Bank maintained its momentum of gains in the markets and gave rise to all of this. Then we saw investors picking the low valuations around the consumer goods side of the market. Nestle was up yesterday, even though it was marginally, but if you look at the volume, it contributed more to the consumer goods segment. For the third consecutive session, we saw WAPCO, Lafarge WAPCO, rising by about 9 to 10% now. That means that this particular company has been on bid. They're paying out 1 naira in dividend to investors. So smart investors are quickly taking position, and that's pushed up the indices of the industrial segment of the markets. Let's look at the insurance space. We just talked earlier about insurance. Of course, recapitalization is key in that space, and we've seen investors continue to push their lockdown funds in that space. The oil and gas segment is about the only space that is actually down, and of course it's due to the loss of 9.6% that we saw on Ardova PLC, which is to be known as Forte Oil. Ardova depressed this segment of the market by some 55 basis points, and this takes us to the energy stocks. 11 naira 25 kobo is what we now have. This is a company that is now down year to date some 37.5%, and if you look at other segments of the market, O&O was unchanged yesterday, but currently if you look at the year to date losses on this side, it's more than 44% down year to date. Other sector that I think we should track as well will be Total PLC. Total is yet to indicate when it will be coming up with its AGM, but if you look at the year-to-date performance, is down by more than 13% at this point in time. These are the major energy stocks. But we know that Seplat, which is a very active stock in the market as well, was down the last time we traded by some 9.9%. For other segments, we don't have so much of change. But of course, if we look at the unlisted securities market, it was unchanged again yesterday, 0.00%. We saw just market capitalization still hanging around this 510 billion naira. Volume of transactions just 346,761, really low compared to what we did in the preceding session. For the debt side of the market, if you look at the bond end of things, investors continue to go for the belly side of this market. Medium side of the curve is what the interest seems to be on. If you look at the 17th of March 2027, that's where you see a lot of deals yesterday, and it's worth some 3.2 billion naira, and that's the highest 5 deals. Investors actually looked at the fact that at the longer end of the curve, there's been shortage of supply, so there were lower bids on that side of the market yesterday. But if you look generally at the markets, things continue to nosedive in terms of the yields now to investors. Ditto for the Nigerian Treasury bill side of the market. We had just 4 deals, but compared to what we did the previous day, things improved a little bit because, again, we saw the local players continuing to push their funds into this space of the market as investors continue to watch out for other areas where there could be investments. We're going into the holiday from tomorrow, and of course, Monday is another holiday, so we expect this level of sentiments to continue to play out in the market. Almost side of things, the banks have been locking down funds in this area. They showed interest across board yesterday, and that's why we have a whopping 207.76 billion naira yesterday. Chimezie.
Thank you, Temple. Well, we'll take a quick break. When we come back, we do an opening call to London as well as the debt and currency market.